Alright, we're looking at a chart of Doge. I'm going to do a quick video on a cryptocurrency. I'm going to choose Doge because it seems like everybody's in Doge. This applies to Bitcoin, Ethereum, and any other cryptocurrency. If you're buying a crypto, you should definitely be using charts. Your buy-sell decision should be based on charts because to me, there is no fundamentals. I mean, you're not looking at it, what it earns or what the product is. It's just pure speculation. So you need to use a chart because to me there's no fundamentals with cryptocurrency. If you're telling me you're buying Doge or Bitcoin because you think it's going to be the future currency, I'm calling bullshit. You're buying it because you think it's going to go higher. Pure speculation. That's Nobody bought tulips in the 1700s because they thought the tulip was worth more than their house. They bought the tulip because they thought the tulip was going to go higher and they were going to get rich. People are buying cryptos because they think they're going to be able to sell it at a higher price. Plain and simple. So let's just go look at this chart. And first I want to do is just you can see the rise up and the drop that it's had. Even here in April, we had this rise up and it pulled back. I mean, I'm not going to do the exact math, but I'll say that's more than a 60-70% pullback before it ran up again. I just don't understand. I remember somebody telling me about the Doge and how they were getting in, and I was like, it's gone up thousands of percent. Like, if you bought at a penny in April and went over 73 cents, a 7,000% return. Who is buying an asset? I don't care if it's a stock or crypto. I don't care what it is. After it's run up 7,000%, how much more do you think is left? How much juice you think is left in the tank? I mean, first of all, do not buy an asset class that has gone parabolic straight up. You shouldn't be buying an asset class. Like, if you are, you should be a day trader. You should be ready to get out. So let's just scroll back. We're on Dogecoin now. I mean, if you look at the history, scrolling back, I'm not really sure when Dogecoin started. I know Dogecoin was started as a joke. And, I mean, just scrolling back, you can see how volatile this is. Look, we'll start with 2016. I don't want to go too much further back because you'll get the idea of what I'm talking about. Look at this spike right here in 2016. So when you're looking at a chart, look at the volume. Look at this record volume coming in. And then you have the next day is a day with lower volume. And then we get the pullback. It crashes back down. So think of this as you get this run up, the public gets sucked in. They call that the dumb money, the public. The public gets sucked into the asset. For every crypto that's being bought or every stock that's being bought, somebody's selling it. So when next time you have a run up like this and you're buying it because you have to jump in because it's going to the moon, ask yourself, who's doing the selling? So here we go. Public gets sucked in. You get a lower volume day, and soon after, crash. This day right here, you get a spike. You get a volume spike. Next day is a lower volume day. Shortly after, it drops back down. It traces back all of its move. From this peak down to here, I'm not going to do the exact math. I'm just guessing that must have been an 80% pullback. So, again, quiet volume. All of a sudden, we get a run up. Right here, you're getting another record day of volume. Shortly after, we get the pullback. And this time, it pulled back all of its move plus some. So just look at volume. Just look at your volume spikes and see what happened after that volume spike. So here you go. You get a big volume spike this day. Next day, lower volume. Shortly after, pulls back all of that move. So when you guys are looking at these charts, you need to pay attention to the volume and where the price is in relation to where it was. If something's gone up 500% in a week, there's not much juice left in that move. Look at this run up. This is straight up parabolic. So pay attention to this. So right here, record volume. Next day, the next day the price went higher, but you had a lower volume day. The rocket's running out of fuel. Next day, you had a bearish engulfing candle. Soon after, retraced. I'm just going to say a 40% pullback. Same thing here. Record volume day. Next day, the price did go up higher on lower volume. There's a warning signal. First of all, the run up is crazy. The rocket's running out of fuel. And sure enough, 75% pullback. So you get the idea. Bitcoin is doing the same thing. If you go back and do what I'm doing with this Dogecoin, Bitcoin has the same thing. It has these run-ups, 50 to 90% pullbacks. Happens all the time. I mean, you can go through the history of Dogecoin and you'll see. You get these run-ups and it pulls all the way back. You get this run-up and pullbacks. Look at this. Look how volatile this chart is. I mean, anybody who's making money on this, I mean, you have to buy and sell it. I can't imagine somebody just buying and holding. And lately, there's been people got sucked in. The public got sucked in on the buy and hold. Waiting for Elon Musk. Everybody's waiting for Elon Musk to give another tweet for the Doge so that can go up. I mean, I don't think that's the way you should be jumping into an asset class, depending on what somebody tweets. But here's your recent activity. This is the recent activity. So that this first surge right here, look at the volume. Next day, lower volume. Shortly after, we get that pullback. Then volume gets real light right here. Sure enough, after everybody kind of lost interest, the selling pressure kind of stopped, and we started to get another pull. We started to get another run. So right here, you get your I mean, it's easy to look at it now and be like, oh, you had a volume record, but yeah, right here you had a volume record. Right here, when you get the second day is way less than this volume spike. Watch out, the rocket's running out of fuel, and sure enough, just like clockwork, it's pulled back. It pulled back all of its last move here. And this week we have light volume. It is a holiday. We are in a holiday weekend, so that may have something to do with it. Or maybe finally things are settling down and it's ready to move up again. What would I do if I was in Doge right now? First of all, I wouldn't be in it. And I'm not trading Doge. But if I was in it, I would be using this last low right here. 24.9. If I was in this and it breaks this last low right here, I'm out. And you should be looking for any rally to hit resistance. And if you can draw a trend line on this. I mean, you had this intraday spike there, which I'm kind of going to ignore. Well, it is breaking its uptrend, but I would say this high right here, the high of 38 cents, is where it should be hitting resistance. It's kind of making a double bottom, so it dropped down, it's rallied up, it's made a lower low, which is a good thing. And if it can break out of this high, then maybe it has some room left to run up. At this point, if I'd be looking at the high of this day right here, that high that it left. Because you see right here, the stock was making higher highs. Right here, it made a lower low, a lower high, a lower low, a lower high. So if it can break that last high of 38, if it can break that of 38, maybe you have some room left in this to run. But again, I just want you to know what you're getting into. I'm not trading Doge. I'm kind of in the camp that, you know, like Joe Kennedy said. They say Joe Kennedy was getting his shoes shined, and the shoe shiner was giving him stock tips on what stocks to buy, and that's when he decided to sell everything because the public was in, everybody was in it, and he actually shorted the market, and he made a killing on the crash of '29. I kind of feel that way right now with Doge. I feel like everybody's in it. If all the public is in it, who's left to keep running it up? But as a trader, if you want to trade it, you use your charts, use your recent high points, recent low points. Your low points would be your stops. Use your recent high points as resistant levels, and you can take it from there. But I'm not trading it, but if you guys are, you guys should be looking at the chart and you should be looking at the volume. And don't buy an asset that runs up 7,000% and you're jumping into it because it's going to go to $1. Just use the charts. Um, Start studying the charts. If you're in Doge, go back and you can see these violent pullbacks are normal for this asset class. One of these times it may not come back. I don't know. Doge going to $1? Maybe. Doge going back to a penny? That could happen too. So plan for both situations. Don't just jump in it and say, don't just think of green lights. Don't just think of it's going to $1. It could go to a penny. So that's all I got to say about the cryptos. I'm not going to post too much about cryptos. I'm not really into the cryptos, but that's what I think. You can look at Bitcoin and it's the same thing. Bitcoin has crashed and Bitcoin's volatile. But just go back, study the chart patterns and the volume patterns, and try to avoid getting sucked into the top. And we'll leave it at that.